So these small interest rate increases do move the markets temporarily, but they're actually meaningless for any long-term planning if you look at what's happened in the past. In other words, let me rephrase it a bit. It shouldn't have much an effect on gold and silver a couple of weeks from now.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and back with us today is the top silver expert, David Morgan, the silver guru from the Morgan Report. David, thank you so much for joining us today.
Well, Elijah, thanks for having me.
All right, now the first topic I'd like to discuss is the purported silver shortage that's out there right now. You have some different opinions than a lot of people in our space. What is your perspective? Is there a silver shortage right now?
No, there's not. I did an update for our members, and also I think I did it for a video like yours where I could share the screen, which I probably do. But right now, the inventory on the COMEX is rather substantial in the registered category. That is what the dealers have already at hand in the month. Memory serves at somewhere around 80 million ounces. When it's down about the 30, 35 million ounces is when I get excited, because that's such a small amount that usually at that point in time, you'll see the silver price take off. But we're about triple that level right now. I think the idea was that the mint was like out of silver to mint the silver liberties. And that was because their forecast was there wouldn't be much demand this year. And silver liberty sales have fallen off drastically the last couple of years, especially this year. It's picked up rather rapidly here with this $14 silver price. So they were unprepared, didn't have enough blanks for the demand temporarily. It was a very temporary thing. So that should cover the silver shortage. I'd love to look in the eye, Elijah, and say, yeah, it's just tight as can be and short, but that's not the case.
Now, as for looking at the price right now, last time we had you on, you were thinking that it looked like this was pretty much that silver had hit a bottom. I mean, that still seems very likely. We saw it go slightly lower. Where are we right now?
Well, I still think we're bottoming. I mean, if you look at, a lot of work of others and myself, I still use the commitment of traders. And from that perspective, it looks really, really good. But the commitment of traders isn't very good for timing. It's good for position trading where you accumulate when it's at a level that's favorable to the commercial interests. But you don't want to get excited about exactly when. And I want to back up on that, Elijah, because we had a very favorable setup that was similar, not identical to, but very similar back in April. And we got a pretty good rally, and I was ready to go ahead and leverage a little bit of our position at the $17 level, and it just maintained that for 3 days and fell back, and it fell off more and more and more to the level we're at now. So I don't see it going much lower. Will it go lower? I don't know. If it goes below, well, gold, if it breaks probably 1180, 1175, that would indicate technically that we might see gold testing the old low of the end of 2015. If that were the case, I would expect silver to do the same. I do not think that's going to happen, but time will tell.
Now, as for going forward here, what is your perspective on how the recent Fed meeting, today, we're recording this Wednesday, the Federal Reserve, as expected, raised interest rates 0.25%. Now, this is actually technically not accommodative. They didn't use the word accommodative in their statement. So with this new Fed policy that's not accommodative, how is this going to impact precious metal prices?
We'll probably see a sell-off tomorrow. I mean, that's pretty much what I expect, or maybe, for Thursday and Friday. It's meaningless in the longer term. I mean, the only time that interest rates really matter to the precious metals from a realistic perspective is when the true rate of interest is above inflation. So if you go to John Williams, and I just had him on our Mastermind series recently, still we've got probably 8% inflation as measured by the 1980 metrics. So for real interest rates to get above that, say 9 or 10%, that's where you have a 2% true yield above the inflation rate. And you're not going to see 8 or 9 or 10% interest rates, at least not probably in my lifetime. I'm not going to rule it out forever. But so these small interest rate increases do move the markets temporarily, but they're actually meaningless for any long-term planning if you look at what's happened in the past. In other words, let me rephrase it a bit. It shouldn't have much an effect on gold and silver a couple of weeks from now.
Definitely. And what is your perspective on the commitments of traders report? I just had David Kranzler on. He was saying that, commercials are still net long precious metals. So it seems like they must be long for a reason, that they're seeing some bullish reason to own precious metals right now.
Yeah, I mean, I respect Dave Kranzler a great deal. I really think he's a very clear thinker, and he's certainly not he doesn't pull his punches either, which I admire. People are convicted. I admire that. Even if they're on the opposite side of the spectrum from me, if they have conviction, I still admire them. But he and I are pretty much on the same page. Yeah, it's a very unusual setup. I mean, I've been watching this for years to see the commercials net long. But again, just going back from recent history, which is the most important, it looked like that in April, and it really didn't go. Will it happen this time? Nobody knows. I think the best thing to do in this environment is to watch the market carefully, accumulate when it's low price like this, but don't try and pick a bottom. So just plan to pick it up. The last thing, Elijah, I think is important to mention is that we're, pushing toward October, which means probably in November or so, there'll be tax loss selling. And, I've got people with some pretty massive portfolios in the resource sector, and they bought pretty well low. But some of these stocks from a low point have gone lower. And so they'll be repositioning their portfolios and selling off, 30% losses or 20% or whatever, and buying them back after 30 days, depending on what tax jurisdiction they're in. I'm not giving tax advice. I'm just speaking generally. That's not a good time at the end of the year if the metals are off to accumulate and try to pick a bottom, because there could be opportunities in here where certain stocks are extremely low priced, extremely undervalued. And a lot of times unsophisticated investors that just want out of position, it might not be a large position, but they'll take XYZ mining and they'll just tell their broker or their electronic mouse, sell it at the market. Well, someone that's savvy would have a market bid that's well under the low price that already exists, and maybe be able to pick up a nice block 2 or 3 of shares because the person on the other side making the transaction didn't know any better, sold at the market. Well, the market has a gap and it's a lot lower. So I'm probably getting way too technical. The point I'm trying to make is simple. We're coming up to tax loss selling. There are losses in a lot of these equities, so be careful.
No, yeah, definitely. So right now in the precious metal equities, how will they be impacted by the coming price action that you're predicting?
Well, in the long term, I see much higher prices for both metals, and that means the underlying equities will super soar. I mean, you usually get a 3-to-1 leverage. So if you get gold up, 100%, you should see some of the top gold stocks go up 300%. And since equities are easier to buy than physical gold, you may see them outperform even that metric. But that's a few years off, or at least a year off in my view. So that's the long-term perspective. On the short term, they can do anything, and they exaggerate the move either up or down. And then again, saying it's tax loss season. So a down move in the metals might be exasperated by the shares because, again, people will get, they'll sell their losers or whatever. So we'll just have to wait and see. I mean, I'm not being as positive as I would like to be, but I'm being very realistic. And I've seen it again and again and again. I really didn't expect this year to be as poor as it is, but the year's not over. And, if the stock market, as an example, started to fall, then gold would probably catch a bid. But I think right now the whole move is against the dollar. The dollar's been strong, but interest rates just moved up, which makes the dollar more attractive to foreign investors because they're going to get a higher yield. And then, of course, it hurts the emerging markets even more because it's harder for them to pay back the dollars they borrowed when they thought the dollar was going to go lower. It's going higher.
Now, that's actually one of the things you recently were reporting on your YouTube channel, your weekly perspective. You talked about, you were reporting on this article saying that there's a lot of currency crises going around the world, and it will eventually come to the United States.
That's right. There's never been a currency that has not failed, really. So sometimes failure doesn't mean absolute zero. It just means that there's a new issue out, or they revalue it, or they tie it to gold, or some monumental change takes place. And so right now, most Americans and a lot of the world really thinks that, it's a temporary problem in a country that they don't live in, Venezuela, Brazil, Turkey, Argentina, and yet it's what I call a contagion, which means it can spread because all these banks are interconnected and they all work off basically reserve currency, the U.S. dollar. So the dollar's strong now, but over time it could weaken. Let's say, for example, you have a big dollar position on a nation state and you can't pay it back. What does that do? Well, that disrupts the system quite a bit. So this is what we're facing going forward. So the dollar will remain strong until it doesn't. I know that sounds like a corny statement, but it's something to really think about because you want what is the anti-dollar, or let's say something that will hedge a dollar position. And going back to gold, I mean, if you were in any of those countries mentioned, these emerging markets, I mean, gold's soaring in those currencies. So it's relative to where you are, relative to what the financial state or conditions are in that given area. But we've got some trying times ahead, Elijah. I mean, the main point, to make it again and say it a different way, is debt is the problem. Increasing the debt does not help the problem. It makes it worse. And at some point, all debts are paid. So how are they paid? Well, they're either paid pennies on the dollar, or they're reneged upon, or they're paid in full. It's impossible to pay the entire debt in full right now. It will never happen.
Now, I'd like to move towards some of the political news right now. We're hearing in the news about this new NAFTA deal, actually a new one that Trump is, that America and Mexico and Canada are wanting to, all agree on. The United States actually might miss the deadline, so Canada might not actually be involved in the deal. What is your perspective on this new deal, though, and how it will impact trade relations between these three countries?
I wrote about it rather extensively about 2 months ago on the Morgan Report, because of this new elected leader in Mexico. He's rather to the left, and that could pose some issues with mining companies in Mexico, and a lot of the better silver mines in the world are in Mexico, as you know, Elijah. So at that time I wrote it, there was kind of a okay to go between Mexico and the U.S., but Canada was standing aside, and Trudeau was acting, in my perspective, like a little kid, but that's just how I see it. So I don't know. I think it could be reworked. I mean, NAFTA was not a good thing for the U.S., and Trump is on this campaign to do these trade deals that are favorable to the United States. So I think that, one, I'm not favorable to any of these trade wars, but some people are. I'm not. I've written about that in the report and explained why. But I think NAFTA is no different. I think from this administration, they're going to make every advantage possible. So when you start taxing or tariffing imports and exports, then it gets to be kind of a bidding war between each other, and everyone's deciding, what's the most or least they should put on a given product. And it really stalls business because the business community isn't sure what to do or what's happening next. Markets like stability. Of course, they ebb and flow every day. But if you can count on something, a year from now or 2 years from now or 5 years from now, your planning is a lot more efficient. If you don't know 6 months from now what the tariff's going to be on a given product that you need for your business, it makes life very, very difficult.
Definitely. And the whole idea of tariffs to begin with seems like it, I took a little bit of international trade in college, and it seems like right off the bat, it's like, oh yeah, that's a good idea to kind of protect domestic producers. But really, in the long run, what the effect it has is people have to pay more for the products, and then they have less money to spend other places. So it really just slows down the economy. It doesn't help at all.
It doesn't. I mean, you can look at subsidies in the same way. I mean, if you subsidize something, you get more of something that's really not needed in the free market. In other words, let's look at the sugar industry. I mean, sugar has been subsidized for years and years and years. There's a world sugar price, and then there's the white sugar domestic price, and they're miles apart. It's been that way for forever. And this is something that the actual market would come up with the fair price if it were left alone. But the laissez-faire free market attitude is something that's, someone like myself will spout from time to time, but it doesn't really exist. I mean, there's very few markets that are free or fair, and they're trying to make them fair or fairer, and it's not fair for that country to add on this export duty. We should do the same, but it just makes the problem worse, and that's the direction we're going, unfortunately.
Definitely. And speaking about that, I just had Gregory Manarino on, and he was talking about how, you're saying that there really aren't a lot of free markets out there. And he was making the argument that, the Federal Reserve and central banks around the world, their policy is to control interest rates. And if you control the price of money, essentially, how can you really have a free market anywhere? Yeah,
well, he stole that from me. I'm joking, but I was at a workshop in Canada, I think about 2 years ago, and Mike Maloney was in the audience, and Mike and I are pretty close. And I said basically the same thing. I said, look, the interest rates are probably the most important thing when it comes to the current monetary system. And if you control the interest rates, by definition, anything else that exists from that point on is manipulated. Because if you manipulate the interest rate, you've manipulated everything that flows from that monetary base, be it M1, 2, or 3, the whole credit system, everything. So if you manipulate interest rates, and just repeating basically what I said at the lecture, but it was funny for me, and this is an aside, but I know I'm being recorded. Mike was like, and Mike has said the same thing, and I'm not sure I'm the original one to come up with the idea, but it's true. If you go to the basic start, and the basis is the U.S. dollar. I mean, like it or not, and the BRICS have, of course, moved away from the dollar a great deal, but they still have to use it. When you control the interest rates, everything from that point forward is distorted. Everything.
And I mean, I think one of the ways to kind of take ourselves out of this distorted world is to own real assets, right?
Well, yes. I mean, wealth isn't, a piece of paper. I mean, we all know that, but some people don't get that idea. But, you don't want to have $1 million in the bank unless, $1 million in the bank is a potential wealth, but it's not real wealth. Real wealth would be if you put that in and bought, a small apartment building, and you bought, let's say, a producing business that makes cardboard boxes or whatever. I mean, that's real production, and that's something real wealth. So, all this money that's floating around, or I should say credit or really debt, isn't really doing much in the productive side of things. I mean, China, love them or not, a lot of the money that they have gathered has been used for productive purposes. I know about the ghost cities, believe me. I've been to China, but they also have been working on the Silk Road, and they've been doing deals all over the planet for real assets in the ground, and, to be determined. In other words, a lot of the African plays are basically green fields or brown fields, but they're there and they own them or own part of them. And this is real assets. That's real wealth. So, yeah, that's what you want to concentrate on. It's what you really have that's, tangible. And this is true of gold and silver, of course, but that's a store of value wealth. I mean, again, and even the biggest gold or silver bug, at some point, that's money, the real money, is going to be spent for something else. And the only reason I'm so big on it is because in certain points in history, that's the smartest thing you can do. But is it the most beneficial to myself and society at large? No, it's not. But it's a holding pattern as these things get revalued, because in a financial collapse, it doesn't mean everything falls to the ground. It means that everything's repriced. Like I said, debts are paid. So when there's 5 cents on the dollar and all the excess debt is sucked out of the system and a lot of people that are over leveraged fail, there'll be the market repricing of all kinds of things. And that's where people that have saved and are out of debt will have the opportunity to take assets that are now repriced that are probably favorable to people.
All right. Well, David Morgan, thank you so much for joining us today. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you had?
Yeah, I'd like to just promote the podcast a little bit more. I do the weekly perspective, and anyone on iTunes, please look up the Morgan Report and pass it on to your friends. I don't make a lot of money on it, but there's advertisers that'll absolutely use it. I don't really have control over it. I mean, I think the last check I got was like $30 for 3 months. So it's not about the money. It's about spreading the word, because I really don't promote the iTunes or the podcast. And I would like to build it up. I think I do my best to do about 10 minutes, talk about what I think are 2 or 3 of the major stories that I can back up in the financial press. And then I usually end with gold and or silver at the end. And I try to make it like a weekly wrap up that's the most important news, at least from my perspective, to help people that are busy in their lives catch up and kind of cut through the too much information age, Elijah. I mean, there's so much out there. So I try to get right to the heart of the matter. Usually I talk about, as you know, something in the debt markets, something in the energy markets, perhaps food, and then the metals. So if you could do that. And as far as we always want members on the free Morgan Report, and that's easily available at morganreport.com, just the first name and an email. Verify you're not a bot, and you will be on the list.
All right. Once again, the Silver Guru, David Morgan, thank you so much for your time.
Thank you, Elijah.